You're in the Business Insurance Zone with me, Steve Savant, syndicated financial columnist and contributing author to Backroom Technician. This week on The Biz, the monthly update series for May 2013. And on today's show, the life insurance update with industry reporter Jessica Lopez.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. Of course, I'm your host, Steve Savant, and we're broadcasting live to a nationwide audience right here in Fountain Hills, Arizona, home of America's largest fountain. And with me today, and what a hit she was on March Madness, Jessica Lopez. Hey, Jessie.
Hi, great to be here, Steve.
Again, Jessie's show killed it. The rest of us was no big deal, but when Jessie was on for the term report that we did, and remember, we're still giving this away, so if you want to hop out to thebiz.tv, you can go ahead and pull that down. The report's absolutely free. We took all the term players, and Jessie's section was just huge, and they loved her. I have to say, though, there was a little remorse because you actually were shining your Hoosier shirt on that, so, whatever.
I know.
I don't know if I should call this an update show or go back in time. We really are going on I get so many questions all the time as if we invented insurance in the last 50 years.
Right.
And so I wanted to kind of walk through just some of the basic ideas because I thought you'd find it somewhat fascinating, and I did. And believe you me, I have enough for at least maybe a good week to 2 weeks worth of questions that so many people want to know, especially producers, young millennials coming into our business who say, hey, Steve, what was the origination of term? What was the origination of whole life? How did we start doing universal life? When did we do variable annuities? So let's just talk about this. And I know you got a list for me. Why don't you give me your first question and then I'll try to address it.
Yes, Steve, I just wanted to take a look at the history of life insurance. And a lot of people these days really think that life insurance is a 20th century concept.
Oh, yeah.
Is that true?
Well, no. I mean, think about this. How far back can you go? The first insurance was invented by Rome. Think about that. We're talking way back, 2,000 years ago. And this gentleman named Caius Marius.
Easy for you to say.
Well, yes, it was difficult. He's Italian. And he was a Roman centurion, and he made a burial. He pulled together communally with other soldiers to create a burial service, something that would happen so when the soldier died, he didn't have to worry about his family. They actually pulled their money in. It was a death benefit. It was, in truth, the original final expense policy.
That's amazing.
I know, and think about this. We just invented this stuff.
Right.
That kind of thinking was already occurring in Rome back 2,000 years ago.
Wow, unbelievable. Now, when did the life insurance product idea come into play?
Well, there was this guy, and remember, most people think about Sir Edmund Halley, and it's true, but there was another gentleman. His name is John Grant. He actually was the first person that actually put together predictable patterns of human life expectancy. And what Sir Edmund Halley did, and of course you know him as the famous astronomer who's that comet is actually named after him. He actually was a mathematician and actually forged the first actuarial tables, and we still use, by the way, the basic format of Sir Edmund Halley's actuarial tables for our mortality pricing for life insurance. We still use his basic premise today. So right about that time, somewhere in that vicinity, we actually started inventing what we call true life insurance, somewhere around 1693. So this isn't a 20th century.
1693.
Yeah, 1693, when Sir Edmund, think about this, interesting note. The average male in England was living about 47 years.
Oh, wow.
I mean, think about that. I mean, wow, when you think about it. And Sir Edmund Halley actually lived quite a long, much more beyond that. But when I think about that, that's when it first started, and we started getting a basic idea about what was going on. How did we invent it? When did it start?
Now, when was the first carrier in the United States basically launched out there for the public?
Well, believe it or not, this came from a religious organization, the First Presbyterian.
Really?
Yeah, they wanted to make sure, since really making money in the ministry wasn't really a good financial future, so they decided to put together some kind of a fund. And this fund actually emerged or evolved into a life insurance carrier. And it was the first stock life insurance carrier.
Wow.
I hate to use the word stock because it's really not stock, but it was commonly owned together, and it wasn't mutual either. So when you have this, they kind of formed this to actually protect their ministers during retirement and or death, so that their spouses, this was all done for spouses and children, so if something happened to dad, because he really wasn't making that much money as a minister, they'd have some kind of provision for the survivors.
So that was really when they started thinking about family protection.
That's the beginning of what I would call American indemnification.
Wow. Now, after AG 38 and XXX back in 2000, when did reserves become part of the life insurance industry?
Well, think about this. We didn't even get into reserves. We think we just invented this back in the day when we started getting into more whole life, and New York actuaries kind of imposed their kind of requirements. But actually, way back in the early 1830s, after the New York fire, a lot of carriers were not ready for this, and they had claims, and they had not enough money to cover those claims, and so they had to scrape together a lot of personal monies from the directors to make everybody secure and make everybody whole. Now, what came out of that post-fire was, we need to park reserves in case we have a kind of a cataclysmic event.
Right.
And that's how we developed reserves. We started reserving out of an accident.
Wow.
So that's our first real idea of when did reserves come to part? Yeah, the Great New York Fire of the 1800s actually caused that.
Wow, that's amazing. Now, when did mutualization of life insurance start?
Well, there was a monster economic panic in 1837. And I have to read a little bit of this because that became the impetus for our shift towards mutualization back in the day. So between 1838 and 1849, only one life insurance company raised capital for an organization on a stock basis. Think about that. The stock companies were in the severe minority. However, there were 17 mutuals because it required little capitalization because everybody was sharing the risk.
Interesting.
So when you think about it back in the day, mutualization, wow, it became because it was easier. You didn't have to come up with a lot of capital, and everybody shared the same risk. And by the way, everybody got to share the same rewards. That's the background thinking of dividends. You're actually given a dividend because we actually made money that year, and everybody that was a policyholder got that divvied up so that they could participate as well. When we come back from the break, we're going to continue our monthly life insurance update for May 2013 with Jessica Lopez. And don't forget to enroll in IULUniversity.com for the best training, education, and sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
Living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Jessica Lopez. And remember, you can order today's materials at thebiz.tv. And while you're out there, click on Backroom Technician icon for their 30-day free trial offer with access to the best needs analysis and client education material that address almost every financial planning scenario. And just a heads up, before moving forward with anything you ever hear on the show, any of our ideas, always consult your tax advisor or legal counsel, as well as your broker-dealer compliance officer if you're FINRA licensed. We're in the middle of our life insurance update, or although I should say our back date for May 2013 with Jessica Lopez. And we're going through some of the history because people always go, like we talked about at the break, where's the reserves come from? When did life insurance get invented? Why did mutualization happen? We're just touching it. These are long history lessons we could give. We're just touching it like a quick crib sheet.
Absolutely, and it's interesting how over time, bits and pieces of what we know today as far as life insurance coverage is, how it's evolved. Now, where we left off was basically in regards to when credit protection began became part of life insurance policy?
Well, you should stutter a little bit because they did it for women. Think about this. Back in the day, they didn't even have the vote. But what they did for women was they allowed them to buy policies on their husbands and, hit this best part, and make it creditor-proof from people who would try to take any debt or anything from them so that they could secure women and children, survivors, from their husband's breadwinning days. And think about this, really, this is a major move in their thinking to really make sure that nobody could infiltrate those policies so that mom and those children would have something if something bad happened. I love that.
That's amazing. Now, who was the first mutual company in the United States?
Oh, well, here's a little, and we get to put a little Steve Savant in here. The first mutual company in the United States that really, what we would call the first one in the U.S. was the Venerable New England, which of course is owned by MetLife now. But yours truly started out as a New England Life. I didn't know if you knew this, but I was a New England Life rookie back in the early 80s, about 83, 84. Can't actually remember myself.
I didn't know that.
She did know that. And I say with whatever humility Steve Savant can scrape up, I set 4 out of 6 records that are still on their sales records, by the way, as a
Nicely
retail
done.
agent, and sold whole life because there wasn't any UL or anything else. It was whole life and basically term. And I started out with the New England Life and spent a couple of good years with them, and they actually did good training and career. Back then, career training was really something.
Uh-huh.
Yeah.
That's fantastic.
Yeah.
Now, what was the first claim crisis of the life insurance industry?
Oh, well, we had a problem in about 1950. National Life Insurance had its first death claim. Now, think about this. This is back in the day. This isn't today. You have your first death claim. Where are we going to get this money? Because they didn't have, think about this, they didn't have enough money to pay a $1,000 death claim.
Oh my gosh.
Now, you got to keep this in perspective. This is way back in the day where you can buy, a nickel beer. Okay? So you got to remember the inflation numbers. But they didn't have enough to do this. So they went to a local bank, the director, with his personal credit, and borrowed the money so that they could always say they paid the claim. I got to tell you something, that alone, I mean, in our modern day history, I don't know of any company that's never not paid a claim. It's possible, I just don't know about it. But back in the day, they were already doing this kind of thing, and think about it, some guy went to the bank, one of the directors went to the bank to make sure that that person got his death claim. That was back in 1850. Wow.
Wow. Now, what was the earliest death claims paid by an insurance company? you think?
Well, I have to say kudos to Mass Mutual. Back in
Really?
the 1852s, they had a death claim. I won't say the gentleman's name, but he was a gold seeker and he died in San Francisco looking for his fortune. And Mass Mutual's first claim in the U.S. that I'm aware of, according to history, was to this gentleman. So
wow.
think about this. I mean, they're paying claims back in the day, and when I'm looking at a $1,000 claim here, a $5,000, I mean, that was real money back in the day.
Yeah. Big time money.
Oh, yeah.
Now, didn't some cashier of a life insurance company start his own company?
A cashier? Henry Hyde?
Yes,
Oh,
yes.
in 1859. Yeah, this guy actually was a cashier for the Mutual of New York Company, right? And he left that company, right, to start a whole brand new company called actually Money, which actually turned into what we now know as AXA.
Oh my
I mean,
gosh.
when we think about the iterations and the evolvement of carriers, this is one of those things where a normal person who was just a cashier, that's not big money.
No.
Started his own company. He knew
Interesting.
enough about it to say, I could do this. And by the way, I wanted to bring up one thing so I don't miss this. Very recently in the news, about 2-3 years ago, they were talking about carriers who actually sent letters of apologies to African Americans for actually issuing policies on slaves.
Oh, wow.
Now think about this. Back in the day in 1852, a number of companies actually provided slave insurance.
Wow.
Back in the day. Today, in our modern time, of course, that's repugnant.
Right.
And of course, they've sent their letters. But think about it. Back in the day, we were covering a slave. A typical slave was covered for $500, and it cost you $11.25 to insure him annually.
Oh, my goodness.
Back in the day.
Wow.
Yeah, I know.
That's
It's
amazing.
It is amazing.
Now, as far as other insurance companies that were formed around ethnic groups, you had mentioned here in 1860, Germania Life Insurance of New York, now Guardian Life.
Yeah, I mean, think about this. You have German immigrants coming into the United States. And by the way, there were a ton of immigrants, Irish immigrants, German immigrants. They decided they were going to form this Germania Life Insurance, right? Very ethnic, very closed-in idea. That actually evolved into what we call today the venerable Guardian. I mean, Guardian's huge balance sheet, been around forever, one of the top dividend-paying carriers in the United States. And that was all formed basically as America was growing. This whole immigrant issue, this whole large population of Germans actually formed, and so many other ethnic groups did the same thing they did by forming certain ethnic groups and then making an insurance carrier around it or making a bank around it. The original was to maintain culture, to maintain identity, and to make sure that people from their ethnic group were profiting and prospering in America. Well, that's all we have on the show for today. Remember, you can follow me on Twitter, Facebook, LinkedIn, or email me, steve@thebiz.tv. Well, that's the Buzz on the Biz for today. You've been in the zone, the Business Insurance Zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.